us from Washington to Wall Street. Let's talk about some of the key macro issues heading into 2024. The first question, given that we're a week away from a Fed decision at the time of taping, is has the market gotten too far ahead of the Fed?
One could make that argument for sure. Look, the Fed was surprisingly hawkish for most of its rate hike campaign. 11 rate hikes later, ending in July of 2023, a couple of periods of pause. All of a sudden, that dovish pivot occurred in December of last year, the thing the market had been waiting for. And very quickly, the market was pricing in 5 to 6 rate hikes, actually 6, maybe down to 5 now, rate cuts, I'm sorry, that would take place during this year. And they all thought, Wall Street, the bond market, predicted that would start in March. And whether it starts in March or May, isn't that important as long as they do occur. But the Fed is pretty outspoken about, the regional Fed presidents are saying, look, 3 probably at the most are we going to cut. And that kind of brought the rate cut expectation from 6 to 5. But one could say that this market is priced, a little ahead of itself with 20 times future earnings, based off of this notion that the Fed is done, rates will be cut, and it will be more significant than they're telegraphing.
What are some of the blind spots that you're keeping an eye out for?
Right now, it's very easy to point out what blind spots there are in the market because no one's really paying attention to them. And because I mentioned earnings being the future earnings being priced in so aggressively, really any kind of growth scare, whether it's from earnings, whether it's from a slowing consumer, manufacturing slowing down, inflation expectations increasing, the health of the consumer expectations decreasing. Luckily, these have all been very Goldilocks figures so far and so good. But the market is setting itself up for a pretty steep decline if something isn't Goldilocks. And I've mentioned this in the past too, where I get the question, is good news bad news for this market, for this economy? We're going to be at the point where bad news is not going to be good for this economy. And I'll tell you why. We are expecting 6 rate cuts in this market. It's already priced in. It's almost a given for what we expect the outcome of this market to be. So if something bad is to happen, the Fed needs to cut rates. I mean, they will. That's the ammunition they have built up for themselves since 2022 by hiking rates. They now have this ability to stimulate the economy by cutting rates. But it's already expected. So if there's bad economic news, it's basically too late. And the Fed is already kind of pricing in this, the market is pricing in a soft landing. And the Fed is going to do its best to execute it, but the market has already gotten ahead of itself in that regard.
AI was the wind beneath the stock market's wings last year. How do you think that this technology is impacting the global economy?
It's had a profound effect. I could have a whole nother show on as to why AI is here to stay, how it's affecting jobs and changes. But I think right now, in the short term, from a market standpoint, if I were to look at the current earning seasons to start this year, it's more of the same. Large cap, the technology, the Magnificent Seven, anything with an artificial intelligence flavor to it, any stocks, they are driving this market forward. Year to date, 75% of the gains in the U.S. economy in the S&P 500 are attributed to NVIDIA and to Microsoft, 2 stocks, major players in the AI space. It's not horrible on the other side of the tape here. We've gotten cautious guidance from some major banks. We've gotten some cautious guidance around consumer spending habits. 3M was one of these companies that kind of had some lackluster predictions for this year. But otherwise, it's been pretty mixed, and it's still very early, but tech is still driving things forward in this market.
Stonebriar Wealth Management, advisors for your life. This is not
not an offer to buy or sell securities. No investment process is free of risk, and there is no guarantee that the investment process described herein will be profitable. Investors may lose all of their investments. Past performance is not indicative of current or future performance and is not a guarantee.